Hi everyone, today we're covering bank accounts, specifically how to open a bank account after a divorce, although these tips and tricks would apply even if you're opening an account and you just weren't going through a divorce, you're just doing the opening of a bank account itself. During a divorce, this is important because most people have had joint bank accounts their entire marriage. Them and their spouse are on the same account. So in most cases, you would keep your spouse on your bank account once the divorce is finalized. Often the easiest way to handle this is to talk with your divorce professional and agree with your spouse about who's going to retain or keep each joint account. Then at the time of the divorce, what can happen is you transfer that account into one of your names, either you or your spouse. Now, how that usually works is you either need to go to the bank together or one person needs to fill out a form saying that they're no longer going to be on the account. So just plan ahead knowing that that's a step that you might need to take. But generally speaking, let's say that you want to start a new bank account. First step is to determine what bank or financial institution like a credit union you want to use. It's really going to depend on a number of factors. For example, would you prefer online banking or in person? Is it important to have a branch at the corner that you can access easily, or are you more comfortable using an app or an online service? Another item to consider is what type of accounts do they offer? Or what are their interest rates on the accounts? What is the interest you're going to accrue on the money that you keep in the account? Other factors to consider: policies associated with that bank and types of accounts. Sometimes you can get benefits based on the type of account and amount of money that you keep within the account. You also may have policies such as overdraft policies. An overdraft policy is if you were to take money out of the account more than you had in the account, what will happen? Does the bank forgive that overdraft or is there a fee associated? So considering a number of issues when deciding what bank you want to start with. Once you decide on a bank or financial institution, the next step is to pick what type of account you want. So there's a number of different types of accounts. First most common account is a checking account. A checking account is typically associated with checks or a debit card, and it's used for transactions in and out. For many banks, you can have as many transactions as you want in and out of a checking account in any given month or period of time. It's used for day-to-day expenses. A savings account, on the other hand, is used for saving money. So it's going to have an interest rate that accrues on the money that's sitting there so that you're continuing to save and grow that money. A savings account is usually limited in how many times you can transfer or withdraw money from that account in a given time period, so just be conscious of that. Other unique types of accounts would be like a CD or certificate of deposit. A CD allows you to put a set amount of money into an account for a set amount of time. You get a higher interest rate than you would on your average account, but you're locked into keeping the money there for that period of time. That would be helpful for something like if you have a long-term goal that you want to purchase a home or a new vehicle in 2 years, you could put money into a certificate of deposit or CD for that period of time. You can't access the money, but it's accruing interest more than it would in a traditional savings or checking account. Other types of accounts as well could be like a money market account or something associated with a brokerage account, which is more like stocks and bonds. But we're just covering the basics of bank accounts today. So you've decided on the bank and you've decided on the type of account. Next step is to set up the account. To do so, you're going to need some information, such as a driver's license or proof of identification, like a social security card. You also may need to fill out some forms and other information for them to be able to open the account in your name and set up typically your online platform where you can handle transactions online as well as in person if you're using an institution that has actual storefronts near you or in your city. So you've picked your bank, you picked your type of account, you set up your account. Now it's time to fund your account. Funding an account means putting money into the account. Now, it's really important to know that certain accounts have certain minimum balances that you have to have. Make sure to talk to your bank or credit union about what that minimum balance is. For example, if an account has a minimum balance of $1,000, you can never go lower than $1,000 in that account, or you could have a negative impact. Another thing to consider is a lot of times if you put a minimum balance in for a certain period of time, you may get a bonus from the bank, like an extra couple $100 because you retained a certain balance for a certain amount of time. If you can get a free extra couple $100 from that bank or credit union, why not? So ask what offers they have when funding your account. After that, you just use your account like you would normally. So for a checking account, you access it with a debit card or a checkbook. And you can do that via an ATM or an online platform. For savings accounts, you are a bit more limited in your ability, again, to transfer money in and out in terms of day-to-day transactions, but you'll still be able to access it typically with your debit card, at least being able to see the account. And also, you'll be able to access it through your online portal. So hopefully that's helpful. It's just the basics of opening a bank account. And definitely check out more videos on this page to be able to see other tips and tricks of how to handle your finances and your processes when it comes to your divorce process. Thanks. See you next time.